Hello everybody, welcome back to another video. Sohail here, and today I want to teach you how you can use trailing stop order on Binance future trading platform to lock in your profits and limit your losses. We're going to see what trailing stop is, how we use it, and in what situations it's more likely to help us in trading. Without wasting any more time, let's get started. On Binance futures trading platform, here in this part we have different types of orders, and here you can find trailing stop order. In my previous video, which was a complete guide to Binance futures platform, you became familiar with different types of orders and you learned how to place stop loss. All of those stop losses that we placed by the help of different types of orders were static, which means they are fixed at your specified price, and when the price reaches to that specified price, the order is triggered and it actually closes an existing open position. Of course, you can cancel those orders anytime you like and change the specified price and set a new higher or lower level for your stop loss. But as I said, again, it's fixed on that price unless you cancel and change it. But trailing stop loss follows the price and automatically moves up or down based on the direction that you place this order. Here we have callback rate, which is actually the distance that our trailing stop follows the price. It's set based on percentage and it's also called trail percentage. So based on the percentage you enter here, you actually specify the distance that your stop loss is going to move with lag behind the price. And here you set the activation price, which actually triggers the trailing stop. So when the price reaches the activation price, a trailing stop lower or higher than the activation price becomes active with a distance that equals to the percentage that you enter here for the callback rate. Let me explain this with an example. Consider you have a long position on Bitcoin and you want to set a trailing stop order at 50,000 and, for example, a callback rate of 2%. So when the price reaches 50,000, a trailing stop will be set at 49,000. If the price moves higher, the trailing stop also moves up by keeping the distance 2%. So if the price reaches to 51,000, the trailing stop moves to 49,980. If the price reaches to 52,000, the trailing stop moves to 50,960. If the price reaches to 55,000, for example, the trailing stop moves to 53,900. But when the price falls and goes down, the trailing stop waits and stops moving. It stays the same and doesn't move down when the price is declining. So if the price goes down to 54,500, for example, the trailing stop remains 53,900. If the price goes lower to 54,000, the trailing stop 53,900, the same. And when the price reaches 53,900, the short order is triggered and it actually closes your open position on Bitcoin. So as you can see, step by step that the price is advancing, by the help of trailing stop, you limit your losses and lock in your profits. Now let's see this in practice with some examples. First, let's open a long position on this contract BTC USDT perpetual and let's set the leverage to 10, for example. We click on confirm and here we go. Let's place a market order with the size 0.002. We click on buy long, order submitted. And here it is, our long position on BTC USDT perpetual contract. Now we want to set a trailing stop order for this long position. Let's select trailing stop order here. Please pay attention, when we have a long position, for closing the long position, we need a short position. And for setting trailing stop order for the long position, which must be on the sell side, you must set the activation price at the current price of the market or higher than the current price of the market. If you set the activation price lower than the current price of the market, for example, let's set it to 40,000. And as you can see, the sell short button is not active. So for setting a short trailing stop order, your activation price must be set at the current price of the market or higher than the current price of the market. The price at the moment is something like 50,000. If you don't fill the activation price, the current price of the market will be considered and the trailing stop will be placed lower than the current price of the market, 1%, 2%, or whatever percentage that you set for the callback rate here. Let's set the callback rate to 2%, for for example, please pay attention that choosing the percentage for callback rate depends on your risk management strategy and also the volatility of the coin that you're trading. In this example, consider you bought your Bitcoin in lower prices and you want to start locking your profit from the current price of the market. So don't fill the activation price, and let's set the size same as our long position size. We enter 0.002. We click on sell short, order submitted, and here it is in open orders. The activation price was the current price of the market when we placed the order, and the trailing stop is 2% lower than this price. If the price goes down, the trailing stop doesn't move, and if the price reaches that level, I mean the level of 2% lower than the entry price, this short order is executed and it will close our long position. And if the price goes higher, the trailing stop also moves up and actually start locking more profits for you. Let me cancel this order and let's go to position tab. Another use of trailing stop order is when, for example, you see that the price is advancing sharply, so you step in and buy the BTC, and instantly after that you set a trailing stop order to lock in your profits as the price going higher. Consider we just opened this long position on BTC USDT perpetual contract, and now we want to set a trailing stop order. We set the callback rate to 1%, for example. We leave the activation price unfilled because we want it to be at the current price of the market, and the size same as our long position, 0.002. We click on sell short, order submitted, and here it is in open orders. By doing this, the trailing stop is 1% lower than the current price of the market. If the price goes down and hit this level, our long position will be closed with loss. And if the price goes higher, the trailing stop also moves higher and start to limiting the loss and locking profits if the price continues advancing. Let me cancel this order and explain another use of trailing stop order. Consider you opened a long position on Bitcoin, actually BTC USDT perpetual contract, and you want to set a trailing stop order higher than the current price of the market. Because, for example, the price is in a consolidation period, in a trading range or a pattern, and you believe if the resistance level is broken, the price is going to advance sharply. So you want to lock in your profits from that point and get the most out of that movement by using a trailing stop. So here you set the activation price higher than the current price of the market. If you remember, you can't set it lower for placing a short position. For example, for 40,000, as you can see, the sell short button is not active. Consider after analyzing the chart, we believe that 64,000 is a significant resistance level, and we believe it's going to be broken and a sharp move after that is going to happen. So we set 64,000 here for the activation price. Let's set the callback rate to 4%. The size 0.002, same size with our long position. We click on sell short, order submitted, and here it is in open orders. So when the price reaches to 64,000, a trailing stop will be placed 4% lower than 64,000. Let me cancel this order, and also let's close this position. Everything I explained is also true for short positions, but in the opposite direction. So I don't repeat everything here again, and I just give you an example to clarify how it works. First, let's open a short position by the help of market order with the size 0.002, for example. We click on sell short, order submitted, and here it is, our short position. And now for this short position, we want to set a trailing stop order, and it must be on the buy side, so it will close our short position. We go to trailing stop order. Let's set the callback rate to 2%. We can leave the activation price unfilled, so it will be active on the current price of the market with the trailing stop 2% higher than this level. Or we can set it lower, for example 48,000, and for the size 0.002 equals to our short position size. We click on buy long, order submitted, and here it is in open orders. So when the price reaches to 48,000, the trailing stop will be placed 2% higher than 48,000. If the price goes down, the trailing stop also moves down, but when the price goes higher, the trailing stop doesn't move, and when the price reaches the trailing stop level, a long position size of 0.002 will be executed and it will close our short position. Please pay attention that if you don't use trailing stop order correctly in a proper situation, the result will be loss. Trailing stop is more helpful when dealing with, for example, a rallying coin, especially when pump and dumps happening in the market, and makes it difficult to forecast the top or the bottom. In this situation, by the help of trailing stop order, you can get the most out of the movement and take advantage of the sharp move as much as you can. In other situations, trailing stop order can bring you loss, because when a pullback or correction happens in the market, your trailing stop would be simply reached and it causes you to exit your position, but after that you see that the coin advances and rises again and you're out of the game. So using a trailing stop order and setting a fixed percentage for stop loss is not always a correct strategy to do, and the standard way of setting and moving a stop loss is based on price action. For example, setting a stop loss must be based on support and resistance levels or other important levels, and if you want to move your stop loss up or down and lock in your profits, it must also be based on price action. For example, if you have a long position after a pullback ended and the price started rising, you can move your stop loss up and set it below the pullback, which is now a strong support level. In the case of using trailing stop, in the situation that a pullback happens, your position is easily closed because the trailing stop is simply hit by the pullback. So using trailing stop order can be successful in situations that we are encountering with sharp moves like the pump and dumps that are very common in crypto market, especially with altcoins. And by the help of trailing stop order in these situations that are very difficult to predict the top or bottom, you can get the most out of the movement and take advantage of the sharp move as much as you can. Alright, that's it. Thank you for watching this video. If you have any question, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you found any value in this video, please like it. Please subscribe to my channel if you haven't already, and hit the bell so you get the notifications of my new videos. See you guys in next episode, and good luck with your trading.